The XRP supply shock is here, and it's happening faster than anyone predicted. We're talking about a massive drain of XRP from exchanges, and today we're going to dive deep into the data, what's causing it, and what it means for the price. This isn't just another market fluctuation. This could be the catalyst we've all been waiting for. Let's get straight to the facts. According to the latest on-chain data from Glassnode, an astonishing 600 million XRP has been pulled off major crypto exchanges in just the last 60 days. Think about that. That's over 500 million XRP that is no longer sitting there, ready to be sold. It's been moved into private wallets, into cold storage, and it signals a massive shift in market sentiment from short-term trading to long-term holding. When you see supply on exchanges drop this dramatically, it's a classic indicator of a supply shock. Basic economics tells us when supply decreases and demand stays the same or increases, the price has to go up. And folks, the demand side of this equation is where things get really exciting. So who is behind this massive accumulation? While retail investors are certainly waking up, the big driver here is institutional money. We're seeing the fingerprints of major players all over this. The recent approval and launch of spot XRP ETFs have opened the floodgates for Wall Street giants like BlackRock and Fidelity to start accumulating XRP on behalf of their clients. These institutions don't buy a few thousand XRP here and there. They operate on a scale that can move markets. When a firm like BlackRock, managing trillions of dollars, decides to add XRP to its portfolio offerings, they need to acquire a massive amount of the actual asset to back their ETF shares. They are essentially vacuuming up the available supply. This isn't speculation. It's the mechanics of how these financial products work. They buy the underlying asset, in this case XRP, and hold it in secure custody. The 600 million XRP that just vanished from exchanges. A significant portion of that is likely heading straight into the vaults of these institutional giants. This isn't just a random event. It's a calculated move by the smartest money in the room. They see the long-term value proposition of XRP, its role in cross-border payments, and its potential to become a global bridge currency. They're not buying for a quick flip. They're accumulating for a multi-year hold, effectively locking up a huge chunk of the circulating supply. This is what a real supply squeeze looks like. Now, why is this specific moment so critical? Because we've seen this movie before. Let's rewind the clock to 2017. Right before XRP went on its legendary bull run, we saw a very similar pattern. There was a period of quiet accumulation, a steady drain of XRP from exchanges, and then, seemingly out of nowhere, the price exploded. The supply on exchanges dwindled, and when retail FOMO kicked in, there was very little XRP available to buy, sending the price parabolic. The patterns we're seeing now are eerily similar, but on a much larger scale. In 2017, it was primarily retail-driven. In 2024, it's being driven by institutions with infinitely deeper pockets. The amount of capital flowing into the new spot XRP ETFs is unprecedented. This institutional demand is creating a constant, relentless buying pressure that simply didn't exist in previous cycles. This brings us to a crucial question. Is XRP about to decouple from Bitcoin? For years, the entire crypto market has been tethered to Bitcoin's price movements. When Bitcoin goes up, altcoins follow. When Bitcoin goes down, the whole market bleeds. But a powerful asset-specific catalyst like this supply shock has the potential to break that correlation. If the demand for XRP, driven by its own utility and institutional adoption through ETFs, becomes strong enough, its price could start moving independently of Bitcoin's. We could see XRP holding its ground, or even rising while the rest of the market is stagnant or falling. A true decoupling would be a game-changer, proving that XRP is not just another altcoin, but a unique digital asset with its own fundamental value drivers. The institutional narrative is the key here. These ETFs are not just a new way to buy XRP, they are a stamp of legitimacy. They signal to the entire traditional finance world that XRP is a serious investment-grade asset. This will attract a new wave of conservative long-term investors who would never have considered buying crypto on a regular exchange. This new demand, combined with the shrinking available supply, is a recipe for a massive price reevaluation. So, What does this mean for you, the XRP holder? It means that your patience might be about to pay off in a big way. The macro setup for XRP has arguably never been better. The legal clarity from the Ripple case, combined with the new fire hose of institutional money from ETFs, is creating a perfect storm. The 600 million XRP withdrawn from exchanges is just the beginning. As more institutions and their clients gain exposure through these regulated products, we can expect this supply drain to accelerate. We are watching the early stages of a major repricing event. The available liquid supply is being locked away, and once the market fully wakes up to what's happening, the scramble for the remaining XRP could be intense. This isn't about hype, it's about connecting the dots. The on-chain data, the institutional flows, the historical precedents, they all point in the same direction. The great XRP supply shock is underway, and it's setting the stage for the next major chapter in XRP's story. Keep a close eye on the exchange reserve levels. This is one of the most important metrics to watch right now. As that number continues to drop, the pressure on the price will continue to build. We are in uncharted territory, with institutional forces at play that we've never seen before in the XRP ecosystem. Don't get shaken out by short-term volatility. The bigger picture is clearer than ever. The fuse has been lit. Thanks for tuning into this urgent update. If you found this analysis helpful, make sure to hit that like button and subscribe for more deep dives into the crypto market. We'll be tracking this story closely as it develops. Stay informed, stay patient, and I'll see you in the next video.